Dinar Shift begins now. A moment of unprecedented clarity has arrived for a currency that has captured the world's attention for decades. After years defined by speculation, rumor, and whispers among global currency enthusiasts, the Central Bank of Iraq has stepped into the spotlight, delivering a meticulously structured announcement that fundamentally changes the narrative surrounding the Iraqi dinar. This isn't another vague policy statement. It is a full, public roadmap detailing the strategy to stabilize, strengthen, and ultimately reposition the national currency on the international financial stage. The level of transparency exhibited by the Central Monetary Authority is in itself a remarkable departure from past practices, signaling an era of new commitment and openness. Today, we delve into the core of this plan, breaking down the specific, actionable steps that define the projected transformation. This week's national evening news broadcast across Iraq became a historic event, as millions tuned in for what they expected to be routine updates, only to receive a stunning and comprehensive monetary policy briefing. The governor of the central bank appeared before the nation, providing a level of detail concerning the dinar's future unseen in over 2 decades. The perennial question, the prospect of a major currency appreciation, or revaluation, has long fueled conversations in economic circles worldwide, yet reliable confirmation has been elusive. Now, however, the central bank has confirmed that a process of profound monetary strengthening is actively underway, with clear, measurable actions designed to elevate the dinar's standing in global finance. The strategy laid out by the governor avoids the use of sensational terminology, but communicates an unmistakable intention. Iraq is preparing its financial system for a monumental shift. The blueprint for this transformation begins with a critical foundational element, the establishment of robust, official partnerships with some of the most influential global financial bodies. The Central Bank of Iraq is now working in direct collaboration with institutions like the U.S. Federal Reserve and the Bank for International Settlements, BIST. This collaboration is a vital step because true international currency strength is not achieved in isolation. It requires deep integration into established, trusted worldwide banking networks and adherence to global financial compliance standards. By publicly confirming these high-level collaborations, Iraq is effectively broadcasting a signal of readiness to the world. It declares that the nation is prepared to re-engage with international markets, not as a nascent or unstable entity, but with a national currency that is buttressed by modern infrastructure and supported by global partners. This first step underscores the gravity of the central bank's commitment, offering a tangible, verifiable action that moves beyond the realm of previous unsubstantiated rumors. It signifies a fundamental pivot toward global best practices and institutional trust. The second core component of this economic overhaul addresses long-standing operational barriers. The central bank has committed to removing key monetary restrictions that have been in place since 2003. These barriers were initially implemented following the periods of instability and conflict to protect the nascent financial system and manage capital flight during the difficult reconstruction years. They severely limited how the dinar could be freely exchanged, used, or converted outside of Iraq's borders, effectively suppressing its global function. The removal of these decades-old, restrictive policies is a prerequisite for any currency seeking to achieve increased international value and greater utility. With Iraq's economy having achieved greater stability and its banking sector undergoing significant modernization, these temporary measures are being systematically dismantled. In essence, Iraq is unlocking its currency, paving the way for the dinar to circulate and be traded more freely in global markets. This policy adjustment is a global financial signal that transcends simple domestic regulation, indicating an intent to become a full participant in the international exchange arena. A compelling, visual announcement during the broadcast focused on the physical manifestation of this change, a new series of Iraqi banknotes. The governor explained that these new notes are being produced with security features at the cutting edge of global standards, designed to rival those used in major international currencies like the US dollar, the euro, and the British pound. These features include sophisticated holograms, advanced micro-text, and specialized color shifting inks, all meticulously designed to deter counterfeiting. The decision to invest substantial resources into creating a highly secure, modern currency is a powerful physical indicator of intent. Central banks do not undertake such costly and complex printing endeavors unless they anticipate that the currency will assume a far more significant and more valuable role within the domestic and international economy. This tangible preparation suggests that Iraq is not merely strengthening its currency on paper, but is actively laying the groundwork for a future where the dinar will be accepted, respected, and circulated globally, rather than just within its national borders. This is a clear, physical testament to the reality of the coming financial transformation. Perhaps the most groundbreaking element of the comprehensive plan is the announced structural mechanism for currency support. The governor confirmed that the dinar will be partially backed by Iraq's immense oil revenues. This move introduces a form of commodity-backed system, a model that is a rarity among major modern economies, which predominantly rely on fiat currency structures. Given that Iraq holds some of the world's largest proven oil reserves, this backing provides the dinar with an inherent foundation of real-world, tangible value. While a traditional fiat currency relies solely on the trust and decree of the issuing government, this commodity-backed structure provides a physical anchor that is directly linked to one of the planet's most valuable natural resources. The central bank explicitly stated its goal for this structure to be fully operational before the end of 2025. For market observers, this signifies that the dinar's underlying valuation will soon be supported by Iraq's colossal hydrocarbon wealth, a factor that could substantially alter its fundamental market dynamics and stability profile. The fifth critical step detailed in the central bank's strategic roadmap concerns the systematic expansion of the nation's international reserves. The report highlighted a remarkable growth, with reserves having surged by over 40% in the preceding year alone. This impressive stockpile includes significant holdings in gold, diverse foreign currencies, and International Monetary Fund (IMF) special drawing rights. The importance of robust reserves cannot be overstated, as they are a primary driver of sustained investor confidence and currency stability. The depth of a central bank's reserves directly correlates to its ability to manage both inflation and exchange rate fluctuations effectively. By intentionally accumulating this financial security, Iraq is creating a powerful safety net before enacting major policy shifts. These reserves function as an economic buffer, ensuring that any appreciation the currency experiences is stable and sustainable over the long term, mitigating the risk of economic shocks, sudden spikes in inflation, or market panic that can accompany rapid monetary changes. To provide the public with a framework for this complex transformation, the central bank governor introduced a concrete, three-phase timeline for the implementation of the reforms. Phase 1, which is already in motion, is dedicated to strengthening the core financial infrastructure. This includes a vigorous upgrade of digital banking systems, a vast expansion of electronic payment capabilities, and the forging of stronger international correspondent banking relationships to ensure seamless global financial connectivity. Phase 2, slated to commence around the middle of 2025, will focus on introducing the new exchange rate mechanisms. These are the technical tools and structures that will be used to accurately determine and manage the dinar's international value as it gains greater global utility. Finally, Phase 3, anticipated by late 2025, marks the culmination of the process, which is the official establishment of the dinar's new and stabilized exchange rate on international currency markets. This public timeline is the first of its kind, offering clear, trackable milestones for the global community. For those who have long tracked the story of the Iraqi dinar, this detailed timeline represents a significant turning point, directly addressing the past environment of speculation. For years, the community often focused on the possibility of a sudden, overnight currency appreciation. However, the central bank's plan makes it clear that the chosen path is one of gradual, disciplined, and controlled implementation. Instead of a single instantaneous surge, the strategy calls for steady, measurable growth and appreciation over an extended period. This controlled, measured methodology is a deliberate choice intended to prevent economic shockwaves. It provides both domestic businesses and international markets ample time to adjust to the dinar's strengthening value. For those who have demonstrated patience, this approach suggests the potential for sustained, long-term appreciation, which is economically far more valuable than short-lived, volatile spikes. Crucially, this strategy also significantly reduces the inherent risks of inflation and financial instability, lending a responsible, measured tone to the entire ambitious plan. Addressing a long-standing point of concern for investors, the central bank also spoke directly to the issue of exchange accessibility. The governor affirmed that existing dinar holders will be fully able to conduct exchanges through verified, authorized dealers, both within Iraq and internationally. Work is already underway to expand the network of these verified exchange centers across numerous global jurisdictions. This proactive approach tackles a key problem for international currency holders who were previously uncertain about the logistics of trading their dinars should the currency significantly appreciate. By developing a secure, transparent, and globally accessible exchange network, Iraq is signaling that it intends for this entire process to be legitimate and universally recognized. This is not being framed as a mere domestic banking upgrade, but as a deliberate, worldwide transition designed to facilitate cross-border transactions. This commitment to international accessibility is a cornerstone of building the necessary global confidence required for the dinar to achieve its target status as a stable, internationally traded currency. Moving beyond purely monetary policy, Iraq's leadership underscored that broader, sustained economic diversification is the true key to maintaining the dinar's enhanced value over time. The government is actively engaged in large-scale investment across multiple non-oil sectors, including manufacturing, technology development, and agriculture. This strategic diversification is designed to reduce the nation's historical, almost exclusive dependence on crude oil revenues, which are inherently volatile. A diversified economic foundation adds an indispensable layer of resilience and strength to the national currency. It ensures that the dinar is supported by revenues generated across multiple successful industries, offering protection against the abrupt fluctuations in global oil prices that have historically posed a significant risk to the Iraqi economy. As these non-oil sectors mature and expand, they will provide a broader, more balanced, and ultimately sustainable financial backing for the currency, leading to a more resilient national economy overall. Inflation control was highlighted as another major policy triumph during the national address. The central bank reported success in keeping the annual inflation rate below the 3% threshold, a notable achievement for a developing economy undergoing rapid structural change. Maintaining this strict control is paramount because it ensures that as the dinar increases in international value, the domestic purchasing power of the Iraqi people remains stable, preventing erratic shifts in the cost of goods and services. Unpredictable surges in currency value can often lead to hyperinflationary pressures, severely impacting the cost of living. Iraq's strict and disciplined inflation policy is a deliberate safeguard against this outcome. A stable inflation rate fosters vital trust among both domestic citizens and international investors, serving as a powerful indicator that the Iraqi financial authorities are approaching this transition with both professionalism and a commitment to long-term foresight, prioritizing stability over dramatic, fleeting gains. The magnitude of this announcement inevitably invites skepticism, particularly from longtime observers who have witnessed previous plans fail to fully materialize. However, there are three key distinguishing factors this time that lend the plan considerable credibility. First, the information was delivered directly and publicly by the highest authority, the central bank governor, on national television, not through unverified leaks or unofficial sources. Second, the roadmap features specific, detailed steps and a clear timeline that the international community can independently monitor and track. Third, and perhaps most compellingly, the core of the plan rests on confirmed, observable partnerships with major, verifiable global financial institutions. These three factors combined make the current announcement the most robust, credible, and actionable monetary policy update in Iraq's recent history. It marks a clear line in the sand, distinguishing this current, structured effort from the ambiguous speculation that dominated previous years of conversation about the dinar's future. It remains crucial, however, for all observers to maintain a realistic and grounded perspective, Currency reform and appreciation is a highly complex process contingent on numerous internal and external variables. Everything from domestic banking readiness and international regulatory compliance to volatile global oil prices and unforeseen geopolitical events can influence the ultimate timeline and execution. Therefore, the prudent approach is to monitor these developments closely, but to avoid expectations of sudden, unearned overnight wealth. The true value of this opportunity, as articulated by experts, lies in understanding that a gradual, sustainable, and controlled appreciation of the currency will prove far more economically beneficial than any short-term, temporary spike. The clear message emanating from Iraq's Central Monetary Authority is that the guiding principles for this massive undertaking are patience, meticulous structure, and unyielding stability. This structured approach is a commitment to a durable financial future, not a speculative gamble. A lesser discussed, yet critically important, element of the plan involves the rapid integration of advanced digital banking systems. Iraq is accelerating the expansion of its mobile banking capabilities and electronic payment infrastructure. This digital modernization is a necessary foundation for all modern, high-functioning currency operations, enabling real-time transaction tracking, transparent settlements, and vastly faster international money transfers. Digital transformation acts as the essential bridge that connects Iraq's internal financial growth directly to the mechanics of the global economy. These technological upgrades are fundamental for enabling smoother exchange rate management and efficient international settlements. In many respects, this digital overhaul is just as vital as the design of the new physical currency notes, as it provides the infrastructure of trust and speed required to support a currency that is designed for global commerce. The central bank has also completely overhauled its public communication approach, opting for radical transparency over the secretive decision-making that characterized past decades. Regular televised updates, official press releases, and detailed online reports are now being utilized to keep both Iraqi citizens and international investors fully informed of the progress. This proactive transparency is a key tool in building and sustaining both local and foreign confidence in the reform process. For many years, the lack of clear, authoritative communication was one of the single biggest challenges in the Iraqi economic story, often allowing rumors and misinformation to fill the vacuum. By openly sharing the specifics of its detailed plans, Iraq is actively repositioning itself as a credible and responsible global financial actor, committed to earning and maintaining international trust. This shift toward open governance is a major cultural and policy change, and it is absolutely essential for achieving the dinar's wider global acceptance. Another important development in the central bank's strategy is the sophisticated diversification of its international reserves. The government is not merely increasing the total quantity of its reserve holdings, it is actively improving their quality and balance. The strategic mix now includes a carefully calibrated balance of gold, various stable foreign currencies, and IMF assets, all designed to insulate the national economy against global financial volatility and systemic shocks. This diversification strategy is intended to make the dinar far less vulnerable to external economic pressures. For instance, if there is an unexpected dip in global oil prices, or if a major foreign currency experiences a period of rapid fluctuation, the diverse reserve mix provides a strong financial cushion. This balanced, modern approach mirrors the strategies of major global economies, confirming that Iraq is actively aligning its policies with the highest international best practices for long-term economic stability and security. The profound implications of these far-reaching reforms extend significantly beyond the numerical value of the currency. They are a powerful indicator of Iraq's growing confidence, independence, and determination on the world stage. For nearly 2 decades, Iraq's economy was largely defined by a reactive posture, responding to the crisis of reconstruction, sanctions, and internal conflict. Now, the nation is choosing to be proactive, deliberately shaping its own economic destiny through calculated, self-determined policy choices. The central bank's new and detailed roadmap is fundamentally about much more than just the dinar. It is about the restoration of Iraq's full financial sovereignty. It is about granting the nation's economy the respect and stability it has long deserved following years of immense national hardship. As this complex plan unfolds throughout the coming period, Iraq could very well emerge as a powerful, successful model for how developing, resource-rich nations can successfully transition into a modern, resilient, and stable global financial system. So, what does this extraordinary level of detail mean for you, the interested viewer, the market observer, or the person who currently holds Iraqi dinars? It means that, for the first time in a very long period, there exists a verifiable, structured, and institutional reason for measured optimism. It confirms that Iraq has moved past mere rhetoric and is actively implementing a multi-year, step-by-step transformation plan, unfolding transparently for the entire world to witness. However, this also mandates a realistic mindset, recognizing that no complex undertaking of this scale will proceed without minor delays or perfect on-schedule materialization. Crucially, this roadmap provides the community with something it has desperately needed: absolute clarity. You now have the full knowledge of which specific milestones to track, which policy benchmarks to follow, and the general timeframe for expected major developments as the year 2025 progresses. As we move through the critical months ahead, the key indicators to watch will be the highly anticipated roll out of the new, secure banknotes, the official public updates concerning the sustained growth of the international reserves, and most importantly, the mid-2025 phase when the new international exchange mechanisms are scheduled to be launched. Every one of these verifiable actions will serve as a clear indicator of real, irreversible progress. It is essential to remember that a stable and significantly strengthened currency benefits not only international market observers, but fundamentally, the Iraqi people themselves. A more robust dinar translates directly into increased purchasing power for the average citizen, greater domestic economic stability, and a deeply renewed sense of national economic pride and opportunity. Whether you are observing this journey from inside Baghdad or from across the global financial landscape, this remains a story of a potentially historic monetary redefinition, one that is poised to fundamentally redefine Iraq's economic destiny for decades to come. This detailed public announcement from the Central Bank of Iraq stands as the most comprehensive, credible, and meticulously planned strategy we have ever seen regarding the future of the dinar. The stated roadmap, the partnerships, and the precise timeline all converge to confirm one overarching truth: Iraq is definitively preparing to fully reintroduce its national currency to the prestigious world stage. The next 12 months are poised to be critically important, and the structured financial and cultural shifts we are witnessing could create echoes that resonate across global markets for many years ahead. Stay tuned, remain fully informed, and keep your perspective realistic and grounded. Dinar Shift is committed to bringing you truth, clarity, and every key development on Iraq's journey toward this historic monetary transformation.